Hello friends, today we'll be talking about business opportunity in India. So let's start. Some general trends and potential business opportunities in India. The business landscape is dynamic and new opportunities may have emerged since then. It is essential to conduct thorough market research and stay updated on the latest trend. Here are some potential business opportunities in India when we start from today. Digital services and technology. E-commerce and online retail continue to grow rapidly. Digital marketing services, including social media management and SEO, mobile app development and software solutions, healthcare and wellness, telemedicine and health tech solutions, fitness and wellness services, including online fitness coaching, nutraceuticals and organic food products, renewable energy, solar energy projects and products, wind energy solutions and consulting, energy efficient appliances and technologies, education technology, EdTech, online learning platforms and course content creation, educational software development, skill development and vocational training, agribusiness, agri-tech solutions for farmers including precision farming, organic farming and sustainable agriculture, farm to table and agro processing businesses, environmental sustainability, waste management and recycling solutions, eco-friendly products and services, water purification and conservation technologies, real estate technology, PropTech solutions for real estate management, virtual reality, VR, in real estate for virtual property tours, sustainable and smart homes, electric vehicles, EVs and infrastructure, manufacturing and distribution of electric vehicles, charging infrastructure development, battery technology and recycling, financial technology, fintech, digital payment solutions and mobile wallets, insurtech for innovative insurance solutions, peer-to-peer lending and crowdfunding platforms, tourism and hospitality, sustainable tourism initiatives, technology-driven travel solutions, night tournament experience. Remember that successful businesses often arise from the combination of innovation, market demand, and effective execution. Always conduct thorough market research, assess competition, and adapt your business model based on changing trends and consumer preferences. Additionally, consider seeking the advice of local experts and industry professionals in India for the most accurate and up-to-date information. What is meaning of buying shares of a company? Buying shares of a company means purchasing ownership in that company. Shares, also known as stocks or equity, represents a portion of ownership in a business. When you buy shares of a company, you become a shareholder and you own a percentage of that company proportional to number of shares you hold relative to total outstanding shares. Here are some key points to understand about buying shares. Ownership. When you buy shares, you essentially become a partial owner of the company. The extent of your ownership depends on the number of shares you hold relative to the total number of outstanding shares. Dividends. As a shareholder, you may be entitled to receive dividends. Dividends are a portion of company's profit distributed to shareholders. Not all companies pay dividends and some may choose to reinvest their profit back into business. Voting rights. Common shareholders typically have a right to vote on certain company matters. The number of votes you have is usually proportional to the number of shares you own. Capital gains. The value of shares can fluctuate based on the company's performance and market conditions. If the value of shares increases from the time you bought them to the time you sell them, you can make a profit known as capital gain. Conversely, if the value decreases, you may incur a capital loss. Risks. Investing in stock carries inherent risks. Stock prices can be volatile and the value of your investment can fluctuate. Factors such as economic condition, market trends, and company performance can impact the value of shares. Liquidity. Stocks are generally considered liquid asset because they can be bought and sold on the stock exchanges. This liquidity allows investors to easily convert their share into cash. Investing in stock can be a way to participate in the success of a company and potentially benefit from its growth. However, it is important to note that stock prices can be unpredictable and past performance is not necessarily indicative of future results. Investors often conduct thorough research and analysis before making investment decisions and may diversify their portfolios to manage risk. Additionally, seeking advice from financial professionals or conducting one's due diligence is recommended for those new to investment. Can I think that if I bought a share of a company, my business is managed by a top business person? When you buy shares of a company, you become a shareholder, which means you own a portion of that company. However, it is crucial to understand the distinction between a shareholder and being involved in day-to-day management or decision-making of the company. As a shareholder, ownership. You have the ownership in the company, but your role is typically limited to that of an investor. The extent of your ownership is proportional to the number of shares you own. Voting rights. Depending on the type of shares you hold, common or preferred, you may have the right to vote on certain matters such as election of the board of directors or major corporate decisions. However, individual shareholders typically have limited influence compared to larger institutional investors or company insiders. Returns. Your returns are linked to the performance of the company. If the company does well, the value of your shares may increase and you may receive dividends. If the company performs poorly, the value of your shares may decrease. Limited management involvement. Being a shareholder doesn't grant you direct involvement in day-to-day management of the company. Top executives and business leaders are responsible for managing the company's operation. If you want to direct involvement in managing a business, you might consider starting your own company or actively participating in the management of a private business. Alternatively, you could seek executive roles within companies such as becoming a CEO or holding other leadership positions. It is important to note that success of a company is influenced by various factors, including the competency of its leadership, market conditions, and industry trends. While having skilled and experienced leaders at the helm can positively impact a company's performance, it doesn't mean that individual shareholders have direct control over managerial decisions. Before investing in shares, it is advisable to conduct thorough research, understand the company's financial health, and consider your investment goals and risk tolerance. If you are seeking active involvement in business management, exploring other avenues beyond stock ownership may be necessary. I can think that my managers of company are toiling for me to make money for me. If you own a business and have managers working for you, it's reasonable to expect that they are working to further the interest and success of the company, which in turn benefits you as the owner. Here are a few points to consider. Managerial responsibilities. Managers are typically responsible for overseeing various aspects of business such as operations, finances, human resources, and strategic planning. Their role is to ensure the efficient functioning of company and contribute to its overall success. Alignment of interests. Ideally, the interests of company's owners, shareholders, and its manager align, especially in a well-run organizations. Managers are motivated to perform well because the success of company often translates into financial benefits for both managers in the form of salaries, bonuses, or stock options, and the owners in the form of increased company values and potential dividends. Employee loyalty and engagement. When employees, including managers, feel a sense of ownership or are rewarded for the company's success, they are likely to be more engaged and committed to their work. This can contribute to a positive work culture and increased productivity. Clear communication. Communication is a key to ensuring that everyone in the organization, including managers, understands the company's goal, strategies, and expectations. Clear communication helps align the efforts of all employees with the overall objectives of business. It is important to note that effective leadership and management practices play a significant role in the success of a company. Regular performance evaluation, feedback mechanisms, and a supportive work environment contribute to motivated and productive team. If you have concerns or questions about how the managers are contributing to the success of business, open communication is crucial. Regular meetings, performances, review, and an open door policy can help foster a transparent and collaborative working relationship. Keep in mind that success of a company is influenced by various factors, and having competent and dedicated managers is just one piece of puzzle. Strategic planning, market conditions, and overall business environment also play significant roles in determining the success of a business. This was all. Thank you.